Hi everyone and welcome to our channel. My name is Denise Harford and I'm an insight specialist at Metropolitan Get Up. So the purpose of our YouTube channel is basically to take everything that's so complex and uncomplexing it. So that just means taking all the things to do with adulting, such as finances, careers, tax, interest, credit scores, credit history, and taking all these complex things and uncomplexing it. Because let's face it, we weren't taught everything in school, and so when we enter into our adulting phases, we're kind of like, what? I'm sorry, what? What on earth is all these things? How do I do it? What does this actually even mean? And so basically what we want to do is give you tips, tricks, and life hacks to actually help you navigate through this, because we're all in this together. We all ask those questions and we all are kind of running around like headless chickens trying to figure out how everything works. So in this video specifically, I'll be tackling assets, and this is a 3-part series called ABCs of Adulting. So assets, budgeting, and credit. Budgeting will be discussed by my colleague Denisha, and credit will be discussed by my colleague Lita. So keep an eye out as those videos pop up on our channel, and they will give you more insights into those specific topics. But first things first, I think we need to define what an asset is. And an asset is basically any type of resource that you own that allows you to generate some sort of profit or cash flow. So maybe you own a business and you're generating a profit or cash flow from that. And obviously what is that? That is money. That is something that you're getting. It's money. That's what your profit is. And so what we need to remember about money is that money loses its value year on year because of, well, unfortunately, inflation. And so what happens, if I can put this in an example for you, is let's say at the end of 2020 you were saving money all year, and at the end of 2020 you have 1,000 rand that you kind of just kept under your bed or in a box in your cupboard. That same 1,000 rand is not going to be able to buy you the same amount of goods in 2021 as it would have in 2020. And that is because what has happened is inflation has been built on that. And so your money actually has lost some of its value since 2020. So what are the ways that we mitigate this and prevent this kind of from happening? And the two main ways that we kind of do this is through savings and investments. And what these do is that it makes sure that your money still grows and doesn't lose as much economic value year on year. And what is the difference between savings and investments? What are these things? Savings is basically you're putting money away, generally monthly, and you're just putting it away into a savings account for specific goals. Maybe you're putting money away to have a safety net, some sort of buffer should anything unexpected happen, maybe a car breaks down, or maybe you want to go on a trip, you want to save for a wedding if you and your partner are getting married. You have these certain goals that you have and things you want to achieve, and you save money to actually get there. The thing with savings is that you're putting money away and you know exactly what interest you're actually getting on that money. So you know how much your money is going to grow. And savings is kind of a low risk ball game, if that's what you want to call it, because you know where you're putting it, you know how much you're going to get out, and you know it's safe. So there's very little risk involved with it. So, and then you have investing. And what exactly is investing? And this is basically buying more assets. And this can be bonds, mutual funds, stocks, investing in real estate. And essentially the thing that we need to remember about investing is that you're expecting your investment to generate a profit. You're expecting cash flow from it. It's something that you've invested in. And one of the things with investing is that it does have a high risk but potentially high reward relationship. And that is because if you're investing and the markets are doing well and the economy is doing well, you could get a really, really great substantial profit on your original investment. But then there's also, if the economy is doing poorly and markets aren't very stable, you could be losing profit or capital from your original investment. But we need to remember that investing is a very long-term strategic ball game. You need to keep your investment in the market long enough because markets fluctuate. So it is a strategic long-term game, while in savings it's more short-term and you do know exactly what is happening to your savings. Ideally, if you can, the smart financial move would be to do both. But especially now with the current context in which we live in, what with COVID and South Africa's economy not doing so well, if you cannot afford to do both, pick one that is best suited to your needs, your goals, and also what you can afford, to make sure that what money you have is still growing and it's not losing economic value as much year on year. And of course, there's various places where you can save. And some of the savings places that you can save is your traditional savings accounts. This has a bit of a low interest just because of the ease of access that you have with taking out the cash monthly. But then you also have your notice deposits, and this is basically giving notice before withdrawing the money, and has a little bit of a higher interest than your traditional savings accounts because you don't have that ease of access of withdrawing the funds. Then you have your fixed deposits, and this is essentially it's keeping your savings in a fixed deposit for a set period of time, between 12 and 16 months, that you can't touch that money, and it just stays there and grows. And also this has a bit of a higher interest than traditional savings accounts, again, because you don't have that ease of access, and it's going to be staying in that account for that specified period. And then you have places where you can invest, and then so these include your retirement fund, and this is basically putting away money into your retirement, your pension, to make sure that when you do retire, you have cash to live off of, because obviously you won't be working anymore. Then you also have a unit trust, and this is basically a fund in which you put in all the stocks that you've bought, all your shares that you have. It's in one place. It is put together in a fund and managed by an expert. Then you have your stock, so you're buying a piece of the company and you basically own a piece of the company. What you want to do with stocks, though, is you want to look at the companies that are doing well and it looks like they're going to be doing well in the future, that they're going to have future growth and future value. And by investing in these, you know that the original investment that you made on them is going to have more value in the future than it had when you originally purchased it. And then you have a stokvel, which is basically a savings club which you contribute to monthly, and based on the predetermined rotation of that money, each person who was participated in that stokvel gets a lump sum at the end of a specified period. And then of course you have your property. And this is basically you maybe buying a piece of property to either rent out, maybe you're buying a piece of property to renovate it and flip it to make it look better, and then essentially that property will have more value than when you purchase it, and then you resell it. And this is basically just allowing yourself to invest in the property market in order to gain a profit. And I want to touch on this more later, so there will be a separate video that speaks specifically to property, how you can enter the property market, and all things to do with property 101. So yes, that is everything to do with savings and investments, and I hope this helps just shed some light on these two things and help you best navigate through these things. And if you do have any questions, please pop them down in the comments below. I'll happily answer them. But also if you have any specific topics that you would want us to address, also pop them in the comments down below, because that'll help us understand what things you're struggling with personally and how we can help and give you tips and tricks and life hacks to best navigate through these. But I hope this helped. Please like, share, and subscribe. Have a wonderful day, everyone.